Hello traders, welcome to another video about gold. Today is Sunday, June 11th. It's around 3:30 p.m. Eastern Time. And we'll start with the fundamental analysis as always. Now, hold on to your seats, folks, because the upcoming week is about to unleash a torrential downpour of groundbreaking financial news that will definitely shake the very foundation of the market. Brace yourselves for a whirlwind of high-impact announcements that will have Wall Street buzzing with anticipation. The coming week is no ordinary week. It's a roller coaster, a ride of financial events that will redefine market sentiment and the course of the economy. While the overall data calendar in the past week was relatively light, the surprise interest rate hikes by the Reserve Bank of Australia by 0.25% from 3.85 to 4.1%, and the Bank of Canada by 0.25% from 4.5 to 4.75, highlighted that inflation, while moderated at the headline level, remains well above the central bank's target. And this puts the spotlight on the US Federal Reserve and the European Central Bank and the Bank of Japan meetings in the coming week. This is the calendar for the coming week. The first important event on Tuesday, June the 13th, with the CPI, followed by Wednesday 14, the Fed interest rate decision, and then Chair Powell's speech. And on the 15th, we have the ECB interest rate decision, and finally Bank of Japan on Friday, June the 16th. On June 13th, the CPI, if there is no upside surprises in inflation, that would support gold and support no hike in Fed's decision. We are still at 70% no hike and 30% they would increase the interest rate by 0.25 percentage point. This could push gold back above 2000 within the coming 2 weeks again. And the Fed's statement, the Fed's plot and chair speech should be much important than the headline. This is the target rate probabilities from cmegroup.com. And you have here different dates that the probability was recorded. And as you can see, 1 month ago, a no hike was at 85% here. And then 1 week, 1 day, and current, now we are at 70%, and same for a 0.25% hike. 1 month ago, it was maybe 10%, and now it's at 30%. And these are the probabilities for the coming months. For the coming meeting, probably there will be no rate hike because the Fed doesn't like to surprise the market and take it off guard. And on July 26th, there is 70% probability of a rate hike of 0.25%, and same applies for September at around 66%. Now let's talk about USD vs the bond yields. Generally, when central banks increase rates, It signals tightening of monetary policy to control inflation or stimulate the economy. This tightening often causes bond prices to decrease, since newly issued bonds will offer higher yields to match the higher interest rates. As a result, existing bonds with lower fixed rates become less attractive in comparison, and that's why the bond prices goes down. When bond prices decrease, the yield on these bonds increase. I hope that this is clear for everyone. Bond yield and price have an inverse relationship. Therefore, when central banks hike rates, bond yields rise as investor demand higher returns to compensate for the increased interest rate environment. Having said that, we have an inverse relationship between yields and gold. And this has a big effect on commodities in general. Plus the USD, which I mentioned in my last video or last report. And if you're trading gold, you must keep a close eye on the yields in the USD. Now, back to the fundamental news that we are expecting. The odds of no change, 70%, 30% for a quarter. So the market should have already priced in a no change, despite the actions from Bank of Canada and the Royal Bank of Australia. And the Fed doesn't like to surprise markets. Maybe CPI data could have an impact on the outcome of the Fed meeting, but we will see. So let's try to anticipate market reactions to each scenario. Now, no change. This will be tricky because the market is expecting with 70% probability a no rate hike. So I expect no dramatic move. But as the no hike becomes a fact and the market absorbs the news, analyzes the minutes and the chair's speech, sentiment and repricing will change, and I believe this will favor gold and the US indices in general. But pay attention. Maybe the Fed will not increase rates, but it could be hawkish on their statement. So like offsetting the no rate hiking, and we'll see how the market reacts if this is the case. Of course, raising interest rate, this will cause a great deal of volatility because the market is not expecting it. And I expect the USD to rise, yields to rise, indices will decline, and gold will follow suit and decline, and finally breaks the moving average, the 100 days moving average. And if this happens, this will be very bearish to gold. This is not 2040. It's 1940. Sorry about that. But remember that more hikes are expected down the road. Ideal trade is to short gold when it tests its highs. Alternatively, stick to the technical levels, buy at 2040, 45 with stop losses below 1930, 1935. We are still range bound between 1940 and 1980, and this is a very stubborn channel, as you can see here, the two yellow lines. And now the MACD is in no man's land. It doesn't know what to do. So we are between the Bollinger Bands, the upper at 2000 and the lower band at 1930, and this is like capping gold between this channel and the upper and lower bands of Bollinger Bands. From a daily technical analysis perspective, in the below chart, I added another indicator called the SAR, or stop and reverse, and remarkably it reversed, offering support at the current price for a potential rise in prices. Is this going to happen? I wish I knew. And the MACD still trying to cross the signal line from below, and this could be bullish. And the commodity channel index at the very bottom of the chart is showing slightly oversold. When it's close to minus 200, this is oversold, and vice versa when it's at 200. Looking again to the moving averages, this is on the daily chart from tradingview.com. Again, the 1941 is offering support for gold. It hasn't been breached since when? Since November 2022. Here. Breaking this level will be highly bearish for gold. If it broke this, I'm sure it's going to test 1900 handle. From a weekly perspective, the MACD is pointing lower and the SAR is pointing lower. Everything is reversed on the weekly, but in summary, there is big news coming, and this could move markets either way. So a safer play is to wait and see. You have to be very, very careful with your entry points and stop losses, and expect a lot of volatility in the coming few days until the market settles and absorb the news. Good luck and have a good day.